Hello guys, welcome to this YouTube channel. Right in this video, we are going to be looking at how to identify valid ICT breaker blocks and how to trade from breaker block zones. So if I should ask the question, what really is a breaker block? A breaker block is a violated order block that turns into another demand or supply zone depending on the market's condition. And one of the key things we must know about breaker blocks is that it is formed when we have a sweep of liquidity or breakable structure high or low points before a market change in character. I won't really say that actually a breaker block is a failed order block. No, rather I would say that a breaker block is actually a violated order block. So when we head to the chart, you are going to understand what I mean by actually saying that a breaker block is actually a violated order block rather than a failed order block. And we have actually two types of breaker blocks. We actually have the bullish breaker block and then we have the bearish breaker block. So now let's head to the charts so you can theoretically understand how to identify a breaker block before we practically look into that. And so we have the market pushing to the upside and then we have this return to the downside. And then you see price created this swing low and then price pushed to the upside and then broke this swing high point. Now you can see that within this zone, we're going to have the order block zone that sponsored the price move to the upside that swept this liquidity resting here and then broke the market structure here. Now you can see that the return of price to the downside actually led to a change in market's character. So you can see that it means that the order block resting here is actually being violated. The order block here did not fail because you can see that when price created the sponsorship candle here, the order block here, price pushed to the upside, you can see we have a sweep of this high, a break of this structure high points. So you can see that now when price returned to the downside, price took out the order block resting here. And then it led to a change in market character. So you can let's look at the candlestick explanation to that here. You can see what we have here is that price push to the upside, we have the return to the downside. Now you can see price created our order block resting here. The last selling candle before the buying move to the upside that swept this high point that took out this liquidity that led to a break in market structure. And then you can see we have the return to the downside that violated this order block. Because what we are expecting is that we want to see that price return to the order block zone and then we further see price push to the upside. But what you can see here is that price came, pushed to the upside, and then price came and violated the order block resting here. So you can see price pushed to the downside and then we have a change in market character. You can see price swept this low point. So we have a change in market character. So this is actually a violated order block, not really a failed order block. So this is actually a bearish breaker block because a bearish breaker block is actually a violated bullish order block. Because you can see this is actually a bullish order block because you can see it sponsored the move to the upside that took out this liquidity, broke structure to the upside. On the return of price to the downside, you can see price took out the order block. So price violated, price breached the order block and then led to a change in the condition of the market, led to a shift in the market's condition. So this is actually a breaker block. And this is actually a bearish breaker block because once price takes out this low point, what we are expecting is to see the pullback to the upside and then we see price falls to the downside, giving us now a bearish move. So a bearish breaker block is actually a violated bullish order block. How do we then trade from the breaker block zone? And in this example, we are actually looking at the bearish breaker block. So how then do we trade from the bearish breaker block zone? So I'm going to show you guys how really you can trade from the bearish breaker block zone. So let me clean up the chart and then I would show you guys how you can actually trade from the bearish breaker block zone. One of the things I look out for in order to actually trade from a breaker block zone is actually to see a fair value gap beside the breaker block zone or actually to see a newly created sponsorship candle, which is actually an order block and then I would actually consider that breaker block zone to be a valid breaker block zone. You can see that from the side of this breaker block zone, actually from this breaker block zone, you can see we actually have the fair value gap beside the breaker block zone. So I would consider this breaker block zone as a zone to look out for to take a trade entry when I'm actually seeing price pulling back into the breaker block zone. This is a valid order block because it led to the move to the upside that took out this liquidity resting here, swept this high points, broke this previous high point here. And then you can see price came to the downside and then violated the order block. So you can see beside the breaker block, we have the fair value gap. So I am going to actually consider this breaker block as a valid breaker block to look out for entry within the lower time frame when price is returning into this fair value gap. This is what we can call from the price action trading methodology as the break and retest, because you can see price broke this support level. So we are expecting to see price pull back to the upside to retest the support level as a resistance level, and then we see price fall to the downside. Or this is what I'll be looking out for. Beside the breaker block, I would want to see an order block created beside the breaker block. Now you can see that we actually have this example. We have the fair value gap beside the breaker block. But you can see before the fair value gap was created, before the sharp move to the downside, you can see price reacted at the order block, gave us this bullish move to the upside. So you can see we have this order block resting here because you can see price swept the previous high of this candle, and then you can see price pushed to the downside and then gave us the change in market character. So instead of selling just within the fair value gap, I can sell from the order block candle. So I can sell from the body of this order block and then the stop loss above here, and then I ride with price to the downside. So I would want to see actually a fair value gap beside the order block, or I would want to see an order block beside the breaker block. So this is what I'll be looking out for in the bearish breaker block scenario. So I'm going to show you guys the bullish breaker block scenario and how to actually look out for entries within the bullish breaker block zone. And then we are going to look at practical chart examples so that you would understand this. So this is actually a condition of a bullish breaker block. You can see we have price pushing to the downside, and then we have the pullback to the outside. Price created this high point, and then we see price fall to the downside, and then price swept the liquidity resting here, broke this previous swing low, broke the structure point. So you can now see we have price pushed to the upside, and then price broke this high point, leading to a change in market character, a shift in market structure. So what we are going to be expecting is that we want to see price pull back into the breaker block zone, the bullish breaker block zone, and then we see price push to the upside. So actually the bullish breaker block zone is actually a violated bearish order block, not a failed bearish order block. So it is actually a violated bearish order block. Why is it a violated and not a failed bearish order block? Because we can see that the order block actually fulfilled the criteria of what? Breaking what? Structure to the downside, creating inefficiency here. So you can see this actually fulfills the criteria for a valid order block. But then you can now see that when price returned to the upside, we can see that price violated it, price breached it, price broke through it, and then it led to a change in market character, which is also called a shift in what? Market character. So for us to trade from the bullish breaker block, actually what you must put into consideration to trade from the bullish breaker block, just the way I've stated for the bearish breaker block, is that beside the bullish breaker block, we want to actually see the fair value gap. Then we trade from 50% of the fair value gap beside the bullish breaker block. So this is what you want to put into consideration. So basically, this is what I'm trying to mean. You can see this is actually our bullish breaker block here, because you can see this is actually the bearish order block that was created that led to a break in market structure, sweep up this liquidity low points, And then you can see price push to the upside and then violated the bearish order block, giving us a bullish breaker block. So you can see what we are going to be anticipating is to see price return into 50% of this fair value gap that is resting beside the bullish breaker block. And then we take an entry to push price to the upside. Or this is what we want to see beside the breaker block. You can see this is actually the bullish breaker block. And beside the bullish breaker block, we can see price created the fair value gap. And then slightly below the bullish breaker block, which is actually the bearish order block, we have this price reaction that created this order block. So you can see this is a valid order block because we have price swept this candle low point, sponsored the move to the upside that broke this bearish order block, making it a bullish breaker block. And then you can see we have the fair value gap, and then we have the newly created order block here because price reacted at the bearish order block. So we want to see price return to mitigate the order block, and then we see price push to the upside. So this is how you actually identify a breaker block. In the next video, we're going to be looking at the mitigation block. But for this particular video, we are actually looking at the ICT breaker block. And hey guys, if you're actually gaining value from this particular video and you're new to this YouTube channel, please kindly subscribe to our YouTube channel, like this video, post your comment in the comment section. Also suggest topics you would want us to actually handle and teach about. And then I would actually work on those comments and then come back again with a video that would answer the questions you would actually make known in the comment section. And also please guys, share this video to friends and families who are actually interested in learning how to trade the financial markets. So now guys, we're going to go to the chart to look at practical real-time chart example so that you can understand how to identify valid breaker blocks and actually how to utilize the breaker block zones to execute high probability trades. So guys, let's look at the real-time chart example. But before we look at the real-time chart example, I would want you guys to understand that to trade from a breaker block, you must be able to identify the market structure and also check out the validity of the breaker block, which has to do with the sweep of the liquidity. So now let's head to the chart so that you would understand how to actually identify a valid ICT breaker block. So first thing I said, you must be able to identify the market structure. As you can see here, the market structure here is actually a bullish market structure. You can see price creating series of higher highs and higher lows, higher highs and higher lows. And then you can see that now we have here price give us this higher high points here by breaking the structure to the upside. You can see here we have a valid break in market structure at the swing high points here. So you can see we have a valid break in market structure at the swing high points. And then you can see then we have a change inwards market character here because you can see this bearish candle pull to the downside, and then we have the bearish candle close below this previous swing low. So this is actually a valid breaker block because you can see price pushed to the upside and then took out this liquidity, broke the structure points here. So this is actually a valid breaker block. And then you see price return to the downside, we have a change in market character. So what you can actually see beside this breaker block, what we have beside this breaker block is actually the fair value gap. You can see this is the last selling candle before the buy move to the upside. So we are going to actually identify our breaker block. So this is actually our breaker block here. And you can see beside the breaker block, we have actually our fair value gap. So this is the bearish breaker block. So my expectation is to see price return to the upside, mitigate this fair value gap, actually to mitigate the breaker block. And then we see price for the push to the downside. And when I want to trade from the breaker block, I do not really project a very far profits level. I would actually want to target a close by low points or high point, depending on the market condition, to actually take my profits. So basically, this is how I am going to take my entry for this particular trade setup. I'm going to set my entry at 50% of this breaker block zone, which is within the fair value gap. And then my stop loss slightly above the wick of this bearish candle that has the fair value gap. And then I'll be targeting this swing low as my region in which I want to take my profits. So you see, I'll be targeting that swing low point, which is actually this swing low point. So let's play price to see actually what price is going to do, if price is going to reach our target profits area. So let's play price to see. Now we can see price is trying to return into the fair value gap, which is within the zone of the breaker block. So you can see price have mitigated the breaker block zone, and you can see price is coming to the downside. So now we can see that what price actually smashed our take profits. So this is how you want to actually trade the breaker blocks. So let's look at also another chart example to actually validate how to really mark out ideal breaker blocks. So let's look at this example to also look at how to actually mark out our breaker block. You can see from this market condition, we can see that the market is actually bearish. Now you can see we actually have our bullish breaker block. Here we have this created order block that sponsored the move to the downside that took out the structural low points. So you can see then we have price pushed to the upside, and then price violated this order block. So this order block becomes our bullish breaker block. So what we are going to see is that now this is actually a valid order block, because you can see this candle serves the high of this candle. You can also see we have the fair value gap resting here. We have the fair value gap resting here. So you can see we actually have our fair value gap resting here. So basically what we are actually expecting was actually to see price return to the order block, and then we see price fall to the downside. But we can see that now price went to the upside and then violated the order block. And then this order block is now our bullish breaker block. So what we are going to be actually expecting to trade off from is actually from the breaker block. So you can see that now this is now our breaker block. But just as I've stated earlier, the criteria I look out for in order to trade from a breaker block is actually to see a fair value gap beside the breaker block, or a newly created sponsorship candle, actually a valid order block beside the breaker block. But then what you can see here is that we do not have a fair value gap beside this breaker block, and we do not really have a valid order block beside the breaker block. The actual place where we actually have a valid order block is actually this particular zone here. You can see this candle sponsored a move to the downside that served the low of this candle, where you can see that price return filled up the inefficiency here, and then price mitigated the order block here. So actually we do not really have any valid sponsorship candle here, and we do not even have any fair value gap here. So taking our entry from this zone of the breaker block is actually going to be a risky one, because those criteria are not actually seen or visible to actually look at this as a high probability trade setup. But let's actually take our entry to see if actually this will play out fine. So I can place the entry at the 50% of the breaker block, and then target this swing high as the take profits area. So let's play price to see what we are actually going to see. So we can see price dropping to the downside. So you can see price rated outwards stop loss. Why? Because you can see beside the bullish breaker block, we do not have a fair value gap. Neither do we have a valid order block created beside the breaker block. So these are the things you must put into consideration when you want to trade from a breaker block. So let's still play price to see what price actually did in this particular price delivery. So you can see price is pushing to the downside. So you can see price is now pushing to the outside after reading our stop loss. But yet price is still coming to the downside. So in order not to just take much of our time, so this is where I'm going to end this video regarding how to identify a valid ICT breaker blocks. So cheers guys, and God bless you guys.